Welcome to TradeTheNBA.com. This is Jonas Reports for the 12th of April. And, well, we came to that 61% range, and miraculously, we got buyers jumping in a significant way. And, they, of course, credit it to the PPI numbers, which, again, this is where we get into a little bit of the ridiculous. The way they do the numbers now, they're just lacking in any credibility whatsoever. We're seeing this throughout much of the science reporting that we get in everything. You had gasoline prices rise nearly 6%. Okay, fine. That's what you really paid in March for, gasoline. But what they decided to do is just to change that and seasonally adjust. And so in their seasonal adjustment, you had a drop of 3%, and that kept the numbers in line. And so the headline print is just what they report, even though it's so far from a reality that it's kind of comical. But as we've seen, the narrative is more important than the actual realities. We saw it with, things reporting with the pandemic and, the use of alternative medications and the faking of studies so that it would look like things like uh, I won't even say it because who knows what YouTube would do. So, but drugs that were effective were declared ineffective, and it's all nonsense. The same thing we get with the unemployment numbers, on and on. And so it becomes a little bit more difficult to gauge what things are without really seeing deeper into the scenario of things. And at the end of the day, the Fed is really compelled to lower rates simply because it's an election year and their guy needs some kind of improvement. Uh, and it's not looking good. It's the same with the labor numbers where all the jobs that came through were part time, but unemployment still stayed the same. It's interesting. And then we talk about the differential between states reporting all these job losses, and miraculously, the national number is positive. So there you have it. Bond market started to wake up a little bit because they're seeing as treasuries, the yield continues to rise on this, and looks like it's got more to go, and that would be correct. Um, and you're not fooling, where the real money goes, which, oil, gold, uh, they're still on a tear. Turns out the Iranians postponed their attack because the U.S. threatened them. Um, who knows if that's true? It doesn't really matter. But the reality is that pending, retaliation, we have no idea what form it's going to take, and that's a serious potential. So those kind of unknowns really throw a lot of things up in the air. Um, as we've talked about, as oil rises, there's no way the euro can hold on to itself because they've got to sell euros to buy dollars to buy oil, natural gas, you name it. It's just an ongoing thing, energy costs, everything else. And this is why, people talk about gold being overdone. It's not even close. The debasement from what you see, what you paid for gold in 1971 versus, where things have gone, it's outperformed, everything. And that's just because what you can buy with that same dollar over time has decreased dramatically, even as other currencies have done the same devaluation. Um, the value of gold continues to rise, well, beyond proportional. It's actually showing that amount of decay in purchasing power, and that's reflective, and it's not stopping anytime soon. So get used to it. Cryptos also are going to benefit from that. Though again, they have the regulation hurdles that you don't quite have with gold, but it is also more difficult to actually have gold. Though it's interesting that Costco selling out on all of the gold bars that they have, even with the premium that they charge, which is not a lot, but the people are just gobbling it up. The difficulty becomes, what are you going to do with it? How are you going to trade it? It's the same thing with Bitcoin in that, how do you convert it into a thing? I mean, if you want to park money for a while, yeah, it's one thing. Um, but it also becomes difficult to, exit. Same thing is going to happen with the market if things start to materialize in a difficult fashion. From an ETH standpoint here, Ethereum also still in a weak stance, so unlikely to hold if it retests those support levels. Things to bear in mind, and there's nothing wrong with this. It's just that's the reality of what we see in markets, and you have to go with what is. And if that's the narrative that's selling, the algorithm sees it, converts to it, and goes with it. You can argue all day until you're blue that you're right about this, that, and the other, and all those things could be true. And the trade can still go completely against you because it's an opportunity to go against conventional wisdom. And there you have it. So in this case, baseline across 23%, buy signal came through, all the proper movements from everything from DOC, MBI reading to shakeout, all aligned, and boom, the rip. There it is, and it was clean. So pretty straightforward stuff. Intraday popped up early pre-market and it filled that back in post pre-market, which was healthy because that filled the positive extremes. And then from there, it was just straight up, and they're just kind of going sideways at this particular stage in the open. ECB is pretty much hamstrung; they can't do anything, and it's a whole lot of nothing burger as far as what can be done. The only thing that really has negative impact at this particular stage, this somewhat sideways movement, is the reality that at any point there could be a world development that will throw a little bit of a shockwave into things. So that's all we really pretty much paid attention to. Otherwise, we just continue to follow what the readings are. And for now, it's stable. So that's the long and the short of it. As always, though, anything relevant, I'll get it on the Skype chat. But I think it's pretty clear what we're seeing so far. Have a good one. Trade well.